The first week of February has been unforgettable. The market is experiencing turbulence, except for the price of gold and silver. Doge is cleaning house thanks to Elon and his team, and the recent Ondo Summit was jam-packed with incredible moments and insights. So let's kick things off with Doge, follow it up with the market, and then finish off with some very juicy moments from the Ondo Summit. Doge has so far claimed to average about $1 billion a day in savings based on budget cuts, and many of those talked about cuts were made to jobs and contracts centered around DEI initiatives in several federal agencies. This includes recommending canceling 12 contracts in the Government Services Administration and the Department of Education, saving us U.S. taxpayers millions.
I don't even think President Trump knows about it because it doesn't even reach the level of his lack of sophistication in terms of intelligence. What they're doing at the Treasury Department is directly connected to the kitchen table of American people in terms of the privacy of their information. Whatever prescriptions you or I may be taking are now in their hands.
And no matter how much mainstream media try to put up a stink, just this week, USAID is officially on administrative leave globally. Essential personnel will continue mission-critical work while others are gone. Overseas staff may return to the U.S. within 30 days.
Elon is doing a great job. He's finding tremendous fraud and corruption and waste. You see it with the USAID, but you're going to see it even more so with other agencies and other parts of government. He's got a staff that's fantastic. He's wanted to be able to do this for a long time, and everybody else knew it was existent, but I think never so much when you look at USAID. That's a fraud. The whole thing is a fraud. Very little being put to good use.
It just happened to be that was the assignment I got. I got all the good ones. So I got Ukraine, and I remember going over convincing our team, our others, to convincing us that we should be providing for loan guarantees. And I went over, I guess, the 12th, 13th time to Kyiv, and I was supposed to announce that there was another $1 billion loan guarantee. And I had gotten a commitment from Poroshenko and from Yatsenyuk that they would take action against the state prosecutor, and they didn't. So they said they were walking out to press conference. I said, no, I'm not going to, or we're not going to give you the $1 billion. They said, you have no authority. You're not the president. The president said. I said, call him. I said, I'm telling you, you're not getting the $1 billion.
Every single line that I look at in terms of events and transactions is either corrupt or ridiculous.
We're talking about extreme levels of fraud against our own people. For those who may not know, USAID was an independent agency of the U.S. federal government founded in 1961, advancing U.S. foreign policy through global development and humanitarian aid. It promoted economic growth, democracy, health, education, and environmental sustainability while providing disaster relief and conflict stabilization, operating in more than 100 countries worldwide. Fast forward to today, it was shut down because the Doge Brigade cracked the code and discovered fraud at the highest levels. Here's crypto czar David Sachs' official opinion.
We knew the US government runs a $2 trillion deficit every year. We're in debt almost $40 trillion. And we also knew that anytime anyone tries to cut anything in Washington, the whole city screams bloody murder. Okay, so the question is just why? Well, now we know. The money is all going to them. It's like round tripping to them. New York Times, getting paid. Politico, getting paid. Bill Kristol, perennial warmonger, getting paid. Ukraine, getting paid. Like 11 out of 12 publications, Ukraine, getting paid.
Incredible.
Viktor Orban, who's the prime minister of Hungary, was saying that he's very popular in Hungary. His political opposition funded by USAID. In Poland, the left-wing political opposition funded by USAID, and on and on and on it goes. Every left-wing organization in the world seems to be getting paid by this slush fund at USAID, which disperses about $50 billion a year. That's $1 billion a week. That's actually a lot of money.
Moving on, the crypto market is down. Most assets have pulled back except for Tether, but of course, that's because Tether's a stablecoin, backed by who knows what. Tether claims to be transparent, but have you actually checked their transparency page? If so, let me know your thoughts, because after looking into it, I'm left with even more questions. First off, when was the last time their reserves were actually updated? Their website says the transparency page is typically refreshed daily, but typically is vague and a non-measurable term. Where's the dates? Where's the accountability? And here's something even more concerning. Tether states that 5% of its reserves are held in Bitcoin. Think about that. If Tether is inflating Bitcoin's price and Bitcoin is part of its own reserves, aren't we looking at a massive self-reinforcing bubble? The deeper you dig, the more red flags you find. So let me know your thoughts. Can Tether really be trusted? With Trump's tariffs incoming, the biggest question is, how will this impact inflation and the broader economy? The US has already experienced record high inflation under the Biden administration, and additional trade barriers could fuel even further economic uncertainty. With all this market turbulence, more people are starting to recognize that gold and precious metals, like silver, aren't just sound money, they're a reliable store of wealth. Just look at the numbers. Gold has surged over 40% in US dollars over the past year, mirroring smaller gains in pound sterling. In euros, gold has climbed an even more impressive 47% year over year. Meanwhile, the S&P 500 has posted a total return of 25% in the last 12 months. And then there's XRP, the most regulated digital asset on the planet, which has skyrocketed over 380% in the past 365 days. In uncertain times, the market is voting with its money, turning to assets that offer stability, resilience, and real value. Are you paying attention? According to the Defiant, as of February 1st, the total value of tokenized real-world assets hit an all-time high of $17 billion. With legal and technological frameworks rapidly taking shape, the sector is poised for exponential growth. Just how big can this market get? Well, let me tell you. Boston Consulting Group projects the tokenization sector could reach $600 billion within the next 5 years. That's a 35x increase from today. Meanwhile, Citi predicted in 2023 that tokenized assets could hit $4 trillion by 2030. McKinsey & Co. offered a similar projection, estimating $2 to $4 trillion in tokenized assets by the end of this decade. Now let's take the conservative estimate. Say we only reach $2 trillion by 2030. That still represents a 117x increase from today's levels. With trillions of dollars in assets primed for tokenization, there's plenty of opportunity for hundreds of market participants racing to bring real-world assets on-chain. The question is, are you paying attention? Moving on, here's a few key takeaways from the Ondo Summit that really stood out to me. Fidelity's deep-rooted presence in digital assets. Most people assume retail investors have outpaced traditional banks in crypto adoption, but that's not necessarily true.
We at Fidelity have been in this space for over a decade now, and as we look back on the journey, what we can look to is where we started, which was with Bitcoin.
Fidelity has been in the digital assets game for over a decade, and many of the biggest financial institutions have been active since the industry's inception, long before the retail crowd took notice. Now these same institutions are trading on the platforms built for institutional-grade infrastructure. It was crazy. Many panelists agreed that while the crypto market will continue to grow and evolve, full-scale adoption is still a ways off.
I'm reminded of some dangerous words in finance. This time it's different. I think a lot of, I've been coming to conferences. This is probably the nicest one of these, but conferences and tokenization, for the past, 5 years. And some people have been working on this for a long time, really banging their heads against the wall. And at each one of those, they said, "Oh, this is time. It's time now." So I'm a little, I don't know that everything's going to change automatically overnight.
In the very beginning, it was very experimental, and it was almost like Las Vegas. It was gambling. It was very sexy though. You attract a lot of people to fancy casinos, but it doesn't have a whole lot of real-world utility. It's not Financial System 2.0. Financial System 2.0. A lot of it is frankly boring.
And I think that psychology up and down is going to still be part of our dynamic until we get the utility.
In the meantime, market volatility presents opportunities. If we acknowledge that the market will trend sideways before its next major growth phase, why not capitalize on the market swings? Having an exit strategy is imperative, and platforms like Merlin can help investors track their positions, receive real-time alerts, and lock in gains when the time is absolutely right. Next, let's talk about the former SEC chairman Bill Hinman. Seeing him on stage at the Ondo Summit definitely raised eyebrows. His past role in propping up Bitcoin and Ethereum while neglecting other digital assets benefited his personal network rather than the broader investor community. Ripple's chief legal officer, Stuart Alderati, hit the nail on the head with his tweet. Hinman shouldn't have been on stage at the Ondo. He should be under oath, answering for the damages his regulatory biases caused. That's why the most interesting part of Hinman's panel wasn't his presence, but rather the CFTC chairman, Summer Mercinger's remarks about a potential CFTC and SEC merger.
Right. Maybe in the government efficiency thing, they could put you all in one building and you guys could, like, you know, have lunch together.
Hester thinks that's a great idea. In fact, she said if I move in next to her, she will make me coffee every day.
This could signal long-term structural changes in financial regulation, hopefully bringing moral and ethically sound leadership into the conversation. One major topic at the summit was the impact of ETFs and ETPs, with BlackRock's CIO sharing insights on how bond ETFs transformed markets. But what I thought wasn't discussed enough or at all was the role of special purpose vehicles, SPVs, in the tokenization of financial assets. SPVs are integral to how exchange-traded products, ETPs, function, particularly in structured finance, mortgage-backed securities, and synthetic ETFs. Many structured ETPs, including leveraged and inverse ETFs, rely on special purpose vehicles to structure derivatives and swaps to meet their objectives. SPVs were traditionally tools for institutional investors to structure complex transactions, isolate risk, and facilitate private market investments. However, today, they're now a key for democratization, giving a broader range of investors access to previously exclusive opportunities in private equity, venture capital, real estate, and crypto. Here's why SPVs matter more now than ever. They lower investment minimums, allowing investors to participate in deals with smaller checks. They empower retail investors, expanding access beyond institutions. They also increase liquidity, improving exit liquidity options in the secondary markets. Also, they provide direct access to high-profile deals, so that means you don't need to chalk up a large fund commitment these days. And lastly, they streamline administration. Platforms like Link2, my former employer, simplify the SPV formation and management process.
When you make an investment on Link2, you, along with our other members, end up owning a fractional share of a special purpose vehicle that owns the underlying private company shares. So when that company lists on NASDAQ, say, those shares are registered, right, and they get listed on NASDAQ, what happens at that point is the shares get distributed by the company's transfer agent to our custodian, who then turns around and distributes it to all of our members' brokerage accounts.
So my final thought here is, why weren't SPVs a bigger part of the conversation at the Ondo Summit? Thankfully, my experience at Link2 gave me a deep understanding of how SPVs empower accredited investors like myself, which is why I'm excited to see how they shape the future of digital finance. I'll be sure to copy my referral link to Link2's platform in the description or comments below. So this way, you can receive $500 off your first investment. And with that being said, I'm off to a special date with my daughter Eden. We're heading down to the Marine Institute in Dana Point Harbor for some quality time together. And last night, I had a wonderful dinner with Leah at Mastro's in Newport Beach, and it was all because of Linda P. Jones. So thank you, Linda, for the generous gift card. But Linda's kindness goes beyond just gestures like this. She's been a trusted source of knowledge and a mentor and a true friend to me and my family for quite some time. Her support and wisdom within our global XRP family is something I've always looked up to. So as we head into the weekend, I hope you all have a great time watching the Super Bowl, enjoy some great food, meaningful moments, and time well spent with your loved ones. Thanks for tuning in. Love you mucho.